Good morning, good morning, good morning. Welcome to today's morning blast. It is Tuesday, the 26th of August, all day. You join myself and Mr. Michael Brown, where we will be reviewing the weekend, also reviewing yesterday, as yesterday was a bank holiday in the UK, and a preview of today and the week ahead. But before we do, I will get the legals out of the way. Nothing discussed on the space of session constitute trading or investment advice, or infers any kind of endorsement by PIQ, myself, Ryan Paisley, or indeed Mr. Michael Brown. How are you, Mr. Michael Brown?
Good morning to you, Ryan. Good morning, everyone. I'm very well, thank you, mate. Very pleased to hear that you've got your audio issues sorted out. My ears only stopped ringing about yesterday afternoon,
Sorry.
so that's
Yeah.
brilliant news to us all, I'm sure.
Well, I aim to please.
You don't often succeed, but you aim.
Well, that's been said before. Um.
Oh,
Anyway.
no. Oh, for fuck's sake.
Anyway. Moving on. What's been occurring?
Yeah, let's move on very quickly from that because that could lead us down all sorts of slippery slopes. And I actually have quite a lot to mention this morning because although, as you said, it has been a bank holiday, a long weekend here in the UK, markets have not taken much of a pause for breath, at least not in terms of fundamental developments. We may as well start with the monetary policy side of things. Obviously, we heard from Fed Chair Joe Powell at the Jackson Hole Symposium on Friday.
Pivot.
That feels like a lifetime ago. But as you said, Ryan, indeed, a policy pivot. Powell, much more dovish than certainly I and I think majority of market participants have been expecting. The key line in his speech was, and I quote, that the shifting balance of risks may warrant adjusting monetary policy. The reason this is important is because in the context of the entire passage, which obviously I'm not going to go through on this call, Powell didn't actually need to give any policy advice at all. He was policy guidance, forgive me. He was talking about how the labour market is in a sort of curious kind of balance, and that the base case is that tariffs introduce a short-term or a one-off change in the price level. The fact that he added in that explicit policy guidance really is all you need to know and suggests that a September cut is firmly on the cards. Money markets on Friday were pricing that at about a 90% chance. We have paired to about an 83% probability as things get underway this morning. I think the way that I would be framing things now, given that we've heard from Powell and given that he seems pretty confident that, although he's not going to use the word again, price pressures from tariffs are going to be temporary, they are going to be transitory in nature. I think the debate has shifted from are they going to cut or are they not going to cut to are they going to deliver a hawkish cut or are they going to deliver a dovish cut? I think a 50 basis point move is probably off the cards, given there is some lingering concern about upside inflation risks. So really, we're all now looking towards the August labour market report, which we'll be getting next Friday, of course. If that is soft again, and of course focus on the revisions in that report, then you're likely to see guidance around that 25 basis point cut being the first in a resumption of that journey back to neutral that they were on last year before they paused the easing cycle. If the jobs report comes in a little bit hotter than expected, which given we've got a new head of the BLS is, I suppose, distinctly possible, then you're likely to see much more cautious guidance and much more cautious framing of that rate cut in September, which now seems pretty much like a certainty. In terms of the market reaction to that on Friday, exactly as you would expect, dovish reaction across the board, equities rallying on Wall Street, treasuries firmer, led by the front end, while the dollar rolled over fairly significantly. What's interesting is that we sit here this morning with pretty much most of G10FX back to roughly where it was before Powell picked up the mic on Friday. Equities having paired probably about half, if not two-thirds of those gains, and certainly the long end of the Treasury curve actually on a yield basis trading wider than we saw before Powell spoke on Friday. So the market reaction to Powell's remarks has been very, very short-lived, and that is because I guess we have had another spanner thrown in the workings of the Fed by President Trump. We heard on Friday from Trump that he would be planning to fire Fed Governor Lisa Cook if she doesn't resign. Of course, this all goes back to the allegations of mortgage fraud that have been made by Bill Pulte, who is a reprehensible man. Let's be completely honest with you. Well, overnight, we had confirmation via Truth Social, where else, that Trump has indeed fired Fed Governor Cook, or I should say, attempted to fire Fed Governor Cook, because Cook has turned around and said in a statement given to the Washington Post that she will not be resigning, she will not be leaving her post, and has disputed Trump's authority to fire her. Now, this is going to get very, very messy indeed for a couple of reasons. The first is because these are still only allegations. Nothing has actually been proven here. No guilt has been proven, and we should be very, very clear in
Yes.
stressing that, which means that Trump is effectively trying to fire someone based on an unsubstantiated rumour, is how the situation
That was
currently looks.
created, which was created by a bit of a twat.
Indeed. And I was actually reading about this on Friday, and in the United States last year, there were 40 successful convictions of mortgage fraud over the whole year in a country of 300 million odd people. This year, apparently, three of the people who they are saying have done mortgage fraud, one is Fed Governor Lisa Cook, the second is Senator Adam Schiff, the third is, I believe, Letitia James, who's the New York Attorney General. What do all three of those people have in
Oh,
common?
I
They've all done
wonder.
things that
I
Trump doesn't
wonder.
especially like. So it does look very, very vindictive. It does look as if the justice system is being weaponized. The second thing is that, of course, we're now in this situation where Cook is going to litigate this. I think that's pretty much nailed on.
Yeah.
And we're going to end up in a very protracted legal battle. Now, I've been doing a little bit of reading, and certainly around what the sell side have been saying on this morning. It seems like the big takeaway is that there are two big hurdles that Trump will have to overcome in order for this firing to actually take effect and actually be legal. Now, the first is earlier this year, when Trump was getting rid of people he didn't like at other independent arm's length federal agencies, the Supreme Court issued a ruling which essentially, when you boil it down, said you are allowed to do this with these other federal agencies like the FTC, who run telecoms in the United States, but we're going to carve out an exception for officials at the Federal Reserve to limit the executive's power to
Right.
remove those officials. So that's the first thing to bear in mind. The second is that Trump has said in this letter, which you can obviously go and read on Truth Social, that Lisa Cook is being removed for cause. Now, for cause is generally taken as meaning, a felony or a misdemeanor or various other illegalities that you have committed while in office. And that's the key part, during one's tenure in office, because these allegations that have been made against Governor Lisa Cook actually took place in 2021, which was before she was even on the Fed board
Oh,
itself.
okay.
So I'm no legal expert. But it does appear from my very cursory reading of the situation that she is probably in quite a good place to fight this one and probably to get it overturned. The other thing that sort of makes me feel I'm probably going down the right path with that view is, if you read all of the commentary, or the bulk of the commentary that's out there, pretty much everyone is saying that, apart from all of the usual suspects who are going, Trump's right about everything, this is the
All
best
right.
decision
Yeah, yeah,
ever.
yeah.
To which I would say, just before we move on from this, fine, if that's your view, I don't really care. Anyone can have any opinion they want. We live in a free country, and the US is supposedly the land of the free. But just remember, if you're sat here now saying Trump can do what he wants, he can fire Lisa Cook, and he can fire Powell because they're not doing what he likes, can we come back to that this time in 2029, even when a Democrat president tries
Yes.
to
Yeah, yeah,
fire all the sycophants that Trump has put on the Fed board,
yeah.
at which point it's going to be the worst thing anyone's ever done in the world? You can't
Yeah.
have that one both ways.
I agree. Also, I was yawning. Yeah, I agree.
I thought you were going to say something else. I didn't realise I'd sent you to sleep. Sorry,
No, no,
Ryan.
no, no. You caught me mid yawn.
Oh dear. We will move on from the Fed, although I'm sure we will come back to that many a time throughout the week ahead. Sadly, we have to stick with Trump because he has been talking trade as well over the last few days. Late on Friday, he announced that they are doing a major tariff investigation on furniture, and this furniture imports tariff rate is to be determined, with the investigation to conclude in the next 50 days. Of course, that saw some downside in some of the big furniture retailer names in the United States. There were also reports that this may be wrapped up as part of the investigation into potential lumber tariffs. So that is one to keep an eye on. Trump was also talking tariffs yesterday and overnight. He said in the Oval Office yesterday that he can use tariffs to stop wars. Okay. He was also, again, threatening export restrictions on chips and substantial additional tariffs over digital services taxes. Of course, this is something that, well, it's a bit of a bone he's had to pick with the EU and various other countries for quite some time now. It did look like that had been resolved with the signing of the US-EU trade deal. It now looks like maybe that hasn't been resolved, given he seems to be going down that path once more. A few other bits and bobs just to round off before I hand back to you, Ryan. In terms of economic data, we had some better than expected business climate data out of Germany yesterday. The IFO Business Climate Index rising to 89 from a prior 88.6. We also saw an improvement in the expectations metric as well, although the current assessment figure did marginally miss expectations. And we also had, the latest new home sales data out of the States yesterday. New home sales up 652,000 in the month of July, up from a prior 627,000. Again, if you're screaming for a rate cut, why are we getting better than expected housing data? Riddle me that one. Speaking of rates, Bloomberg, citing sources, noted that ECB officials, they plan to stick with their plan. That's not the best wording ever, but plan to stick with their plan to hold rates steady now that the US and EU have indeed agreed a trade deal. These sources also noted that the September meeting should see the ECB leave policy on hold, while the September forecasts are likely to be broadly unchanged from that issued in June, reiterating that there will be a modest dip in inflation in 2026 before headline CPI returns to the 2% target in 2027. Sticking with the EU, news out of France yesterday, their Prime Minister Bayrou has called a confidence vote on September the 8th. It seems very, very likely that he is going to lose that confidence vote on the 8th of September, which essentially leaves us where we were kind of this time last year, if not slightly earlier, whereby we are potentially going to go down the route of legislative elections in France. Of course, you would expect the National Rally, which is Le Pen's party, to do relatively well in those elections if they were to take place. Markets have already sat up and taken notice of this somewhat. The OAT Bund spread hit its widest level since April yesterday, back north of 75 basis points, and that is indeed where we continue to trade this morning, so potentially one to keep an eye on there. A couple of other things. Sorry, I'm going to go back to the US. The debt number 2 at the Treasury, Michael Faulkender, he is going to leave the Trump administration and go back to lecturing at a university he was at previously. Initially, this was said to be due to personal reasons. It later transpired that apparently he'd fallen out with Trump and hadn't been given his fulsome backing to some of the policies of the administration, which means he's been shuffled out the door. Speaking of those policies, a rather worrying one is that the Trump administration have now taken a 10% stake in Intel. They've converted various grants that they were going to give under the CHIPS Act into an equity stake. This is getting a bit ridiculous at this stage, to be completely honest with you. We're sort of veering down the route of Chinese-style central planning in the US economy, particularly when you've got NEC director Kevin Hassett on TV yesterday saying it's distinctly possible that the government takes more equity stakes in other firms. So state-sponsored capitalism, here we are. And last, but by no means least, one for Tom Talks Cars, because I can see he's on the call this morning. NVIDIA, they announced yesterday that the Blackwell-powered Jetson Thor is reportedly now available, right. And that is supposedly going to accelerate the age of general robotics. So jolly good news for them, I suppose.
Lovely jubbly. Well, thank you very much for that, Mr. Michael Brown. So I will read off some headlines via our dear friend Zach's overnight news roundup.
He's back, is he?
He is. I actually spent Saturday in a field with him, Saturday day and night in a field with him, getting very, very drunk. But less said about that, the better. Where are we? Let's start with some trade and tariff headlines. So Trump threatened on Truth Social to impose substantial additional tariffs on countries that do not remove discriminatory actions such as digital taxes, legislation and rules against US tech companies. He also threatened to export restrictions on chips. Senior Chinese trade negotiator is heading to Washington this week for what is expected to be the first dialogue in the US capital, according to WSJ sources, as both sides seek to establish regular communication during the extended tariff truce. talks this week to focus on soybean purchases, with Beijing looking for removal of 20% fentanyl tariffs and textile restrictions. Temu, the small goods seller, they resumed shipping goods from Chinese factories directly to the US consumers and increased its advertising spending in the US. This follows the trade truce between Washington and Beijing. Top trade MEP Lang, that's a member of European Parliament, said the European Commission is expected to reveal its proposals to lift US tariffs on industrial goods and cars. The EU must impose stricter rules on Chinese e-commerce platforms to stop European companies from being overwhelmed by competitors such as Temu. That's according to Poland's largest online marketplace.
Not that they've got skin in the game there, or
Not
anything.
that they've got skin in the game. China, they've more than quadrupled its exports of steel in semi-finished form so far this year, adding to an unprecedented flood of metal, even after a wave of trade actions. Macro news, stocks and dollars were initially sold, with gold bid and bonds twist steepening after President Trump's post on social media about removing Fed's cook. Obviously, Michael's gone into quite detailed about Fed cook, so I'll skirt over those. Fed Williams said that the era of persistently low underlying interest rates does not appear to be over, based on his reading of the data. The US will make an announcement this week on Japan's $550 billion investment in US. Commerce Secretary Lutnick said, with a top Japanese trade envoy planning to visit Washington to formalise the package. Japan's Finance Minister Kato said, quote, "It's important for currencies to move in a stable manner, reflecting fundamentals, and we remain alarmed over FX moves, including those driven by speculators," unquote. Japan's finance ministry is planning to request a record 32.38 trillion yen, which in real money is $219.8 billion, for debt servicing costs in the next financial year's budget. That's quite a lot. Japan will invest $68 billion in India over the next 10 years, with a focus on areas such as artificial intelligence and semiconductor development. UK shop prices, they rose this month by the most since March last year, according to BRC data. Sticking with the UK, joblessness in the UK will soon hit the highest level since the beginning of 2021, according to analysis by Resolution Foundation, pointing to a rapid weakening in the jobs market. Just more bad news for the UK. Speaking
Oh
of,
God, actually, sorry. I was going to say one thing I forgot to mention. You
go on.
bringing up the bloody Resolution Foundation. There were reports yesterday that their former head, Torsten Bell, has been
Oh
put in
yeah.
charge of planning the budget here in the UK. So if you've got more than about 30 pence in your savings account, then well, you ain't going to have it for much longer.
Yeah, for those that don't know, Torsten Bell is just absolute. He gets very frothy knickers for taxation, and he's about to be put in charge. Well, he's about to be moved up the ranks by Rachel Reeves to basically provide her with policy ideas. So we're all fucked.
Yeah, literally.
It's the gist of it. South Korea, their consumer confidence rose to its highest in 7 years as surging stock prices and resilient exports offset tariff uncertainty. What else we got here? Taiwan's interest rate swaps are rising to levels that show traders are reducing monetary easing bets as the country defies headwinds from US tariffs. In geopolitical news, China and Russia should jointly safeguard their security and development interests. That's according to China's President Xi, as he told visiting Russian Parliament Speaker on Tuesday, in their efforts to build a more equitable international order. Sigma geopolitics, put your teeth in, Ryan. The US, UK and Australia's trilateral partnership, that's the AUKUS partnership, is at a, quote, inflection point, and all three must redouble efforts to ensure its success. That's according to Washington think tank. I know Trump seems to be a little bit anti this little partnership a little while ago. I don't know where he sits at the moment. In equity news, Interactive Brokers, they will be added to S&P 500 index on the opening of the trade on August 28th, replacing Walgreens Boots Alliance. Obviously, we much prefer Pepperstone in this room, but can't talk about that. Morgan Stanley, they've said that based on Asia's supply chain checks, packaging for Nvidia's H20 is currently suspended, although we were told last week that they're going to stop producing the H20 anyway. It noted that assembly of H20 HDX servers was halted 1 to 2 weeks ago, and since demand forecasts for the H20 GPU modules have recently been revised down. However, Morgan Stanley noted that Chinese customers are showing strong interest in Nvidia's B40 chip, projecting demand for 2 million units this year with 5 million units next year.
Good.
Good. Boeing plans to sell 103 airplanes to Korean Airlines for $36.2 billion. The deal was part of a larger planned $50 billion investment, including GE Aerospace engine maintenance. Norway's $2 trillion with a T wealth fund said it has divested from Caterpillar. I'm assuming they mean the kind of construction equipment and not, caterpillars in general, as well as five Israeli banking groups on ethics grounds. US investments in renewable energy projects plunged this year as developers responded to White House policy shifts targeting the sector. Investments fell $20.5 billion or 36% in the first half of the year. And finally, from me, before we hand back to you, Hyundai Motor Group said Tuesday it will increase US investments to $26 billion through 2028 to expand its presence in the market, adding $5 billion to its March pledge. I do wonder, all these pledges to invest in the US, who is actually keeping tabs of what is being invested? Because yes, it makes great headlines for the people like Trump Social and stuff like that, but really, it's like, we're seeing some massive numbers, but I'd be really keen to find out, if anyone's going to audit this.
Well, I would imagine not. Certainly, well, I suppose the only precedent we've got is those Chinese agricultural purchases a few years
90%
back,
done.
and they never actually happened. The other thing with it is, and the EU actually flagged this up, of all people, a lot of this investment that's being pledged is coming from the private sector.
Yeah, so
And,
how do you force that?
well, unless you're Trump and you take a stake in the firms, you can't force private companies to go and invest in the US. So yeah, I think a lot of that is just headlines, and
Yeah.
the actual investment will be a tiny fraction of it
The,
when
the
it all
thing is,
shakes out.
the thing is, I suppose from the company's point of view, you say a massive number. Trump gets happy with if you're doing it. They seem like they're doing some good things by investing in the US. Trump's happy that you've said it out loud.
Mm.
Now, neither of you now need to look into this anymore because Trump's not going to pull them up for not investing after he's promised they will. And the company don't want to go, actually, we only invested 30 pence.
Yeah, exactly. Yeah. So it's an odd one, but like you say, I think it's one that will just kind of slowly fade into the background.
Yeah, exactly that. But anyway, so what's current today, my friend?
Yeah, well, we'll do so. We may as well do the week ahead as well, given that
Yeah.
it's sort of a synthetic Monday here in the UK. Frankly, the short answer to that is not a lot, to be completely honest with you. We've got some sort of tier two data out of the States today. We do have the latest US durable goods orders. They're due at 1:30 this afternoon. Orders seen falling by 4% in July, continuing from a 9.4% decline that we saw in June. A lot of this has been skewed horrifically actually by those various purchase commitments that we were just mentioning. So I don't think there's much by way of signal that can be obtained from that data. And then at 3 o'clock this afternoon, we get the latest consumer confidence figures from the Conference Board, whose index is set to fall to 96.5, down for a prior 97.2. Of course, we had a big fall in the Michigan sentiment indicator earlier in the month as well. In terms of other bits and bobs today, we are due to hear from the Fed's Actually, no, forgive me. We've already heard from the Fed's barking, so forget that. We are due to hear from the ECB's Vilroy, though, and we also have a 2-year Treasury auction at 6 o'clock this evening, $69 billion worth being sold off. In terms of the rest of the week, as I said to you a moment ago, the docket is relatively light. Tomorrow, Wednesday, all eyes will be on earnings from Nvidia after the market close. They are due up at 9:20 in the evening London time, 4:20 in the afternoon in the United States. Other than that, not much for traders to get their teeth into besides a 5-year Treasury sale out of the United States. Into Thursday, very much more of the same. We've got minutes due from the July ECB meeting, which are a bit of a cure for insomnia, but not really much good for anything else. We also have a second estimate of Q2 GDP out of the States, which is unlikely to be revised from the 3% growth on an annualized quarter-on-quarter basis that we saw in the initial reading. We also have the weekly jobless claims figures, where, of course, the continuing jobless claims metric, that does coincide with the August non-farm payroll survey week. And also on Thursday, this week's Treasury supply wraps up with a 7-year sale. And then into Friday, We get your favourite economic indicator, Ryan, the Tokyo
Yes.
CPI figures out of Japan, which are seen rising by 2.6%, which would be quite a significant slowdown from the 2.9% that we saw in July. We also get flash inflation out of Germany. We get the PCE figures out of the States, the core PCE metric, of course, being the Fed's preferred inflation gauge. That is seen rising by 2.9% on a year-on-year basis in July, up from a prior 2.8%. I'm just going to say that doesn't really matter much, and I'm not sure CPI next month matters, and I'm not sure PPI next month matters really either. Powell was pretty clear on Friday that he's now in the camp that tariffs are going to have a one-time effect and they're going to take a few months to work their way through the data. So the reaction function from a policy perspective is much more tilted towards the labour market now, despite what all the usual suspects are going to be ranting about on the internet. Also on Friday, we get the latest Canadian GDP stats. The economy is set to have shrunk in Q2, primarily as tariff front-running unwinds. Also getting the M&I Chicago PMI data and final consumer sentiment stats from the University of Michigan are due on Friday afternoon as well. And of course, in addition to all of that, market participants will continue to focus on any geopolitical headlines, trade headlines, and of course, this ongoing saga now around the future of Fed Governor Cook. But for the time being, that is all from me this morning.
Wonderful. Well, thank you very much, Mr. Michael Brown. Pleasure to have you back after being away on Monday.
Oh,
Listeners,
did you miss me?
I did. After waking up following actually, I went to see Nile Rodgers and Chic play on Sunday, so I was a bit worse for wear yesterday anyway, so it's a good job there was a bank holiday. Anyway, listeners, thank you so much for tuning in as always. I hope you've had a great weekend. Those in the UK, I hope you had a very good extended weekend. Whatever you're doing today, stay safe, keep it tight. Just a bit of a admin side from me, myself and the awesome Angie Setzer, who I can see listening in this morning. Our grain market blast has been moved back by 15 minutes. We now start at 9:45 Eastern time, 2:45 UK time. But yeah, whatever you're doing today, keep it tight, stay safe, and we'll see you all tomorrow. Much love.
Bye for now.